Just over a half hour away from the opening bell on Wall Street. We want to talk markets right now with Sam Stovall, who is Chief Investment Strategist at CFRA Research. And Sam, how are you feeling these days? We're trying to get a feel on things because obviously markets took off at the beginning of the year. This week hasn't been so great.
Hey, Becky. Well, I'm thinking that this week is simply a digestion phase. I mean, let's face it, the S&P Composite 1500, which is basically the U.S. stock market, was up 7.3% in the fourth quarter of last year and 9.2% through February 2nd. So in 4 months or so, we were up more than 17%. Also, historically, February is the second weakest month of the year. We were trading at about 19 times forward 12-month estimates for the S&P 500, which is about 12% premium to its longer-term average. And also, we had the AAII poll come out saying that bullish sentiment was at or above its historical average for the first time in 58 weeks. So I think we basically got ahead of ourselves. Digestion is likely to continue a bit, but I think next week's inflation data will probably calm some nerves.
What data do we get? Is it CPI, PPI, both?
We get both of those. Both are expected to show another stair step down. So headline CPI up 6.4%, core up 5.4%. PPI should also see a similar downtrend. So I think that should at least soothe some ruffled feathers.
Sam, I guess some of the big kind of question marks out there are still what happens to inflation from wages if they continue to climb. We talked to Bank of America earlier this show, and they talked a little bit about how wages went up from what they're seeing from more than 65 million accounts that they're watching. Part of that was because minimum wage requirements went up in a lot of states, something like 30 states at the beginning of the year. They pointed to the Social Security increase, a huge increase, the biggest we've seen in over 40 years. And those things could continue to put pressure on things. Plus, if you see higher energy costs down the road, that could kind of change the picture, too. And that has to be something in the back of the collective Fed head minds.
Oh, absolutely. And I think that's one of the reasons why we are continuing to get the chorus of central bankers singing about higher for longer. But also, let's remember that once these higher numbers are in, each successive number is continuing to be year-over-year percentages. So the expectation is that we're going to continue on the downtrend. Probably one of the positive aspects of the most recent employment data was the wage component, which actually was lower than anticipated, mainly because most of the jobs that had been added were from the lower paying leisure facilities, restaurants, and service areas. So, we could end up seeing that be a continuation as well.